Good morning. Thank you for watching our video. We're Liberty International Consulting. Please remember that this presentation is not legal or financial advice and should not be considered as such. Today, we're going to review financial and operational due diligence when you're purchasing a business. What is due diligence? Due diligence is a detailed analysis of different areas of a business to determine its value and/or feasibility. There are different types of business purchases. You could purchase the stocks, the share, the business itself, the company, or for instance, you could only purchase the assets of the business. When you purchase the business itself, you're purchasing assets and liabilities, everything that encompasses the business. When you purchase only the assets, that's what you're purchasing, only the assets of the business. You could do it through your own company and then just purchase the assets such as inventory, machinery, furniture, equipment, even the brand, the sign, only the assets of the business. Doing a due diligence is very important. The time and money you might invest in doing the due diligence or a market feasibility study can help you avoid important losses. It will be an investment that will surely pay for itself. There are different types also of due diligence. There's financial and operational, the one we'll review today. There's also legal due diligence, tax due diligence, administrative due diligence. They're all important, but today we'll focus on financial and operational due diligence. And focused on asset purchase. So financial and operational due diligence focus on asset purchase, but it is very important to perform the other types. For instance, the legal due diligence, it's also key to avoid problems such as ownership of assets being sold. Is the person or company who's selling me the assets really the owner of those assets? That's something you need to make sure of. Can the contract be transferred? For instance, the lease contract, can it be transferred to me or not? What about permits and licenses? Can they transfer them or not? Or will I have to get my own? Well, that is very important to know before you proceed with the purchase of the business. The goal of the financial and operational due diligence is to be able to determine if sales, costs, expenses, and asset values are correct and or convenient for you to proceed with the purchase. Regarding sales, what should you look for? You have to see current and past sales. Is there growth or is there potential for growth? Maybe a business is not managed properly, and with your managing skills, you could grow it. Is there potential for that? What about the market? Maybe you should do a market research and find out if that market is growing or declining, or if it's stagnated as well. So that is something you should consider. Also, what about non-declared cash sales? Unfortunately, there are many businesses that do not declare the cash sales. You will find that, more often than not. How do you determine the real sales? There are ways to do it, but you have to look into it. You have to look into documents, receipts, accounting records, bank statements. You have to look at purchases. Also, it's very important that you visit the business at different times of the day and in different days to see the operations of the business firsthand, to see how many customers, how many clients are actually coming in. And of course, if the seller gives you permission, it'd be very important to contact the clients to see how loyal they be with the business, or are they loyal to the owner? That's another thing you should consider. Now, regarding cost of sales, the first thing is, of course, ask for purchase receipts or purchase invoices. So for a certain period of time, so you can make sure that the cost of sales they're telling you, the cost of the merchandise they're selling or the products they're selling, it's correct. Also, you could see what's the average markup in the industry. The markup means if you buy something for 100, then you mark it up 50%, and then you sell it for 150. So what's the average in the industry? Are they within the average? What they're telling you is correct according to the industry average, or are they too low, which would give you an idea of potential there for extra margin, or are they too high, which could be an indicator of maybe something is not wrong with the numbers they're giving you. So you need to do a detailed analysis of product sales versus costs. And also, with seller's permission, You could contact suppliers to find out what the actual cost is, how much of a certain product they've purchased, within the last 3 months, within the last year. That will give you an idea also. Now, regarding expenses of the business, regular operational expenses, you should also ask for receipts, for invoices, contracts for things like the lease, services, utilities. Regarding employees, ask for pay stubs, ask for W-2s, 1099s, so you could find out what is the actual cost of running the business. But there also might be cash payments. You should also ask for receipts, invoices, and everything that is related to cash payments. So you could find out what the real cost of running the business is. And also, it would definitely give you an idea of what the taxes are if you could ask for the tax return. If they should give you the tax return. Now, if they're not declaring the cash, both income and expenses, then the taxes will not be real, but it will give you an idea of where to base your analysis. Now, regarding the business operation, you should consider, like we mentioned before, are the clients loyal to the owner or to a certain employee, or is that person indispensable to run the business? Is the income attached to them or not? Or when you change ownership, or if you change personnel, the business will keep running as usual? That is something you definitely need to consider, because like licenses and permits, they might be tied to a person or the company. And then, like we said before, you might consider buying the company and not just the assets, because the license is attached to the company. And maybe that's one of the greatest assets that company has. In some cases, the value of the company is determined by the license, the permits they have for a certain activity, which are very hard to get. In that case, you should definitely consider buying the company. But if they're attached to a person, whether it's an employee or the owner, and they leave, then you cannot continue running the business without them. So that's another analysis you should make before you proceed with the purchase. You should also ask to see the contracts. And at this point, like we said, this presentation is about the financial and operational due diligence analysis of the business. But you should definitely hire an experienced lawyer to review those contracts to see if they're okay, if they're still valid, can they be transferred or not? Can they be transferred to your company and to yourself, or do you need to get your own? Same thing for licenses and permits. Also, it's important to find out if the business has social media accounts, email, phone numbers that are key to getting clients to the business. For instance, once we saw a case where this business main asset was its Google account. Whenever you looked up for that type of business in Google, it came out within the first 3 spots, organically, not paying for the spot, but organically. So that was a very important asset of the business. Now, can that be transferred? Will they give that to you, or will they keep it and just keep on running in a different address? So that's also something that you should definitely consider before moving on with the purchase. Liberty International Consulting, we've been doing this for over 10 years. Allow us to help you reach your goals. You can contact us for a free consultation at info@libertyinternationalconsulting.com or to WhatsApp 1786-444-6193. Thank you very much.